Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abati. Good morning, Ayo. Good morning, Vimbai. All our viewers. It's Money Mondays. I love Friday, but I love Mondays as well. There's a lot to get to. There's so much news. Let's look at what to expect this week. We couldn't even fit everything into the graphic. This might have already happened. Blue Origin's Glen rocket may have already launched already. That should have happened any minute now. That's today. Tomorrow, you got US PPI. Wednesday, you've got JP Morgan, Wells Fargo, Citi, Goldman, BlackRock, a number of financials reporting their earnings for Q4. We also have Marco Rubio's Senate confirmation. I think Thursday, Scott Bessent. You've also got UK CPI. So much in the week. Thursday, US retail sales, US jobless claims. Friday, I think we get China GDP for the last quarter, and then you also get Euro area CPI. Going to oil, oil jumped. I mean, look at this. Brent crude at $81.18 early trading, even from Friday. West Texas Intermediate North American grade 78.04. So you can see putting Nigeria's benchmark there if you're Nigeria, Iraq, Libya, whoever. Now the benchmark is below the Brent crude. That's where you want to be, right? Why is this? I look at natural gas at $4.15 for natural gas. So the U.S. has announced new sanctions on Russian oil. Russia has been avoiding these sanctions by using shadow fleets, right? And I'm going to use this as an example to try and justify something the MBS is doing, because this is part of global oil. And oil traders recognize the fact that the US sanctions are now targeting, look at that, 30% of the shadow fleets of Russia's oil could be impacted. And oil fell because even though trading oil in Russia is supposed to be illegal and banned and sanctioned, you still have, other fleets that are not recognized still being part of the total amount of oil in the global markets. And as a result of that, because to about 800 to 1 million barrels are likely to be affected of those shadow cargoes, oil prices rose because you're going to have, less global oil on the markets. And also, it's expected that Donald Trump is going to squeeze Iran. I mean, look for possible tensions to rise between US and Iran, more sanctions, which will take off barrels of oil from Iran. So you're seeing oil at a 4-month high. Asia markets falling. I mean, they've been bearish since last week. It was pretty bad today. Shanghai Composite Index was down despite some really good trade numbers from China. Hang Seng was down, Nikkei 225 in Japan was down, Kospi down, Asia markets, pretty much this was the hot job print, and Dr. Abati previewed this for us on Friday. So let's quickly move from Asia to the China exports. Look at this, 10.7% year-on-year jump for China exports in December of 2024. 9th month in a row of growth. The forecast from a Reuters economist poll was 7.3% growth. November was 6.7%. So a trade surplus in just 1 month of $104 billion. As a whole, looking at 2024, basically what is this? A lot of exporters are trying to front load their cargoes as quickly as possible before Trump comes into office and slams them with tariffs. Look at China's numbers for 2024, despite economic weakness. $3.58 trillion in exports. That is equal to the GDP of Africa. Even more, if you take Africa at 3%. Now, if you take the devaluations of currencies in different African nations like Nigeria, maybe Africa is even less than 3 trillion. Imports was 2.5 trillion, giving China a trade surplus of $992 billion. I think we're going to go to Rachel Reeves now. Speaking of China, she was in China. She's been criticized for this for some people some conservatives, but she went to China for a 2-day visit, met the vice premier there, signed a 600 million pound worth of China deals. Here she is defending her budget again, which doesn't seem to go away, and also justifying her trip to China. Let's listen to her.
Fiscal rules that I set out in my budget in October are non-negotiable, and growth is the number one mission of this government, to make our country better off. And that's why I'm in China, to unlock tangible benefits for British businesses exporting and trading around the world.
Keir Starmer is also going to be making a speech today on artificial intelligence. We're going to be looking forward to him talking about data centers. He's going to be talking about the UK wanting to position itself as a leader in AI. He's going to talk about trying to get more investments into the UK on artificial intelligence. So we look forward to hearing that speech from the Prime Minister of the UK. And again, showing you the impact and importance. We just had the Consumer Electronics Show in Las Vegas that has already ended. So we're looking forward to that speech on artificial artificial intelligence, seeing if he's going to announce, more. By the way, China's trade, before we get to non-farm payrolls, I hope we have the numbers of China and the UK trade numbers, right? Just so you to take a look at this. 32 billion going from the UK in pounds to China. 55 billion going the other way. This is from the Office of National Statistics as at the second quarter of 2024. So do some quick math. That is 23 billion trade surplus China has over the UK as China has over other countries. You don't hear Rachel really shouting about tariffs to close the gap. Non-farm payrolls, Dr. Abati previewed this for us on Friday. It came in hot, like your fried eggs this morning, or boiled if you want to be healthy. 256,000 for December. The forecast was for 160. November was 227, December unemployment falling from 4.2 to 4.1. Stocks fell, the 10-year treasury yield rose to 4.75%. And I mean, if you're a trader, you're going to risk your money in the stock market or get 4.75 yield. So also, Bank of America says no more rate cuts. I think JP Morgan said only 2 expected. A lot of asset management firms have now slashed their rate cut expectations for 2024 because this is going to feed into the next decision, which some still expect to be a cut from the Fed, but less rate cuts in the United States. Finally, to Nigeria, the big topic on the Bureau of Statistics, rebasing GDP. So 2 things here. One, they're rebasing GDP to 2019 before COVID. Again, you're just using a new base year because it's supposed to happen every 5 years. For CPI, they are using 2024, and there have been some folks have issues with that because it might create distortions. Here's Basil Abia, who is a co-founder of Verev Africa, who's laid his concerns out.
Distortions that will arise. Let's not forget, when you put the ground zero, in this context, when you put the ground zero at 2024, that's the price reference period as your base year, you artificially generate an inflationary trend that is distorted. What do I mean by that? The ground zero for inflation calculation right after the usage of 2024 as your base year goes back to single digit. And when it goes back to single digit, because of the fact that 2024 was a specifically unique year from a price shock perspective, we had our record high headline inflation rate in 2024. Don't forget. We had our record high in 28 years, record high food inflation rate as well. Food inflation rate at the highest by June 2024 was recorded at 40%. And, we took up to 37% in headline inflation. Headline inflation now is currently at 34.60%. Food inflation is currently at 39%. So when your ground zero starts at that peak point, there is a tendency for the ground zero inflation calculation to go back to single digit, sometimes even lower than 5%. How does that reflect on the real story of price pressure?
This is social media. I've been debating people all weekend. This MBS is considering including illegal activities in its computation of GDP. Here's my back and forth with Professor Owalake of the Capital Markets Professor of the Nasarawa University.
No single country in Africa that is including illegal activities in the computation of GDP. So it's good to expand the number of products, number of sectors. For example, we hear
Professor,
the framework.
Professor, before you let go of that point, and since that was my next question. Is that a moral argument that you shouldn't include illegal activities? Are you arguing from a moral standpoint? Because it's still a transaction, is it not? Whether it's prostitution or drugs or whatever it is. Yes, but when you do that, you see, there are 2 issues with it. When you include legal activities in your GDP computation, number 1, you tend to legitimize them. So you're making a moral argument.
And
so it's moral.
2, there is also the.
So it's moral.
Yes, you legitimize them. Okay, why is the central bank not recognizing the black market rate? Why is it that today, when you talk about exchange rate, even for research purposes, if I'm doing a time series study on, say, the impact of exchange rate on inflation, okay, I would be, of course, collecting secondary data, from the central bank, and that data will be the official.
But Professor, we do use the black markets. Professor Waleke, we do use the black markets.
No,
we use the black markets. You and I, Nigerians use the black market as a reference. We don't?
Yeah, it exists. I'm saying it exists, but it's not. You don't put an official stamp on it. That's the point I'm making.
That's our update for today.
Okay, very interesting stories there, but the time has been taken up, not enough time left to have other inputs. So we just thank you for
so
this
much.
general review
Thank you.
of global business stories.